Okay, guys, it's a bit styles back again with another video, and we're going to be breaking down EURUSD trade for the last week and the opportunities that were present. Right now, this is a new week already. You can see that we are already forming the new weekly candle, and it looks like we are taking out these lows and these lows. However, we're going to be focusing on this week, which is the previous week. You can see, looking at the weekly chart, you can see that price opened, swept out this high, went into this weekly order block, right? And then we attacked the sell side of the curve, and this sell liquidity is looking juicy, right? On the weekly basis, you can see the reason why we are selling. Price went up. See this big rejection, failed to close above, broke below. This is an inverse fair value gap right here. If I can see my mouse, then this is a fair value gap right here that price is respected over here. And if price respected this fair value gap and failed to close above that high, it means that this low is the next target, the next draw on liquidity, and we have closed below this inverse fair value gap. You can see it right here, and this is the current fractal of price. This is the weekly. Price tapped into the inverse fair value gap, right? There's also a fair value gap right here with two other blocks, two candles. Price tapped it nicely, broke below this structure, and you can see that we have just been bearish. Everything on the weekly screams bearish. Okay, so now let's go to the daily. And the daily time frame is a bit different, right? We can take out this blue line now, or we'll leave it there and make it into something beautiful. You can see that this is a daily order block. What we have here is a clean daily order block, right? So I'm going to label it DOB, OB, okay, and let's make it tick times 3. All right, 3 pixels tick, and that inverse fair value gap was respected here. We have broke structure to the downside. This is a break of structure, guys. Okay, and now after breaking structure, you can see that price paused here, retraced back into this fair value gap, and you were expected to break lower, but it didn't. This is Thursday. Price came close, but it didn't. It decided to retrace back into premium, forming what? Equal lows. We can see that we have equal lows right here, which is a nice draw on liquidity for sellers, right? So you have a lot of sellers below this place ready to take in their entries. You also have people who bought from here thinking that, okay, this is a reversal, these are double bottoms, right? The test will teach you double bottoms and say that this is a strong zone of resistance. So people have their stop losses here. Price goes up, taps into this daily order block, and you can see that this is the week which you're going to be addressing. This is Monday, Tuesday, this is Wednesday. You can see that this is Wednesday FOMC. We had FOMC on this day, and this candle instantly ripped below, right? The next candle also ripped below. So if you had missed this FOMC trading day, this next candle, which is Thursday, also gave a beautiful opportunity. So let's go into the charts, the 1 hour time frame, and let's see what we have right there. Okay, oh, the 4 hour time frame at first. So looking at the 4 hour time frame, you can see that same fractal of price from the equal lows right here, broke structure. You can see that fair value gaps as supporting price higher, right? Then this fair value gap is supposed to support price as well, but we failed to go above the high. We hit a 4 hour order block, right, which is inside the daily order block. So we hit a 4 hour order block inside the daily order block. That's like double confirmations, right? Those are two strong indicators telling us that what are you doing? What are you doing? Buying. What are you doing buying? What are you doing buying, right? Price respected this fair value gap, yes. Broke structure, tapped around here, came back, looked like it was respecting this fair value gap, and this is a trap, right? This is a trap. Since liquidity is resting below here, people bought here. People that were buying here move their stop loss to these regions, and that's a trap. That's what happens when you focus only on the lower time frame. You'll be focused on buying around here, forgetting that, or not minding that price is actually in a 4 hour order block inside of a daily order block. So now, when I saw this, right, I just saw, let's mark out the new week opening range, right? So Sunday, we can start from 21 because we can't really get Monday. Okay, we have Monday 1 o'clock right here. So price came into this fair value gap on Tuesday, right? In the London session, you form this pattern. And yes, if you're an intraday trader, you would have taken a setup here. But the cleanest setup to take was this, right? So on Wednesday FOMC, when I saw that price, this push failed to take out this high, took my entry right here, kept it above here. Let me take out this so you can see. So my entry was right above here, just above that region, and then I targeted 4 arrow. Yep. So the thing is that you don't know what's going to happen in the market, so I was still considering this other block, thinking that price can react on this other block, but you can see that price just absolutely ripped and then fell to the bottom. I think it gave 6 arrow, yes, 6.5 arrow, but I was out for 4 arrow before that, right? And that was that for that the FOMC trade, right? So naturally we avoid news trading days because those are risky days to trade. So the ideal day to trade would have been Thursday, which is this candle right here. But let's also go down low and let's see what we have. Okay, prior to Thursday. So the small little scalp opportunity. This is Thursday's trading. Take note. Let's mark it out with this indicator. Okay. I've showed you the trade I took already. This is the 4-hour trade I took from that region down to this area. I saw this fair value gap, this large zone, and I was very, very suspicious of it. Okay. Now, this is Tuesday. If you're following the retracement, this break below, consolidation, break above, tap into the daily order block, and you believe that this region is going to hold, right? Maybe after price feeding this fair value gap and broke structure to the upside, you saw this change in state of delivery, then you saw this fair value gap, you decided to take a buy, right? Very textbook setup, right? Very neat. You have a sweep, a break below these lows, tap into a group of other blocks right here, an impulsive break of structure. You can see 3 white candles showing that price has a tension. Price came, tapped into that zone, and perhaps one would have bought here, stop loss below here, and he would have targeted maybe 2 arrow or targeted these highs to take out his trade, right? And you can see that the price never got to that region, and you'd have been on the wrong side of the market, right? So except you had set break even, which you will get taken out on the next day, which is Wednesday, you would have really had a very crazy day. So I actually took this trade, right? I tried to buy around here, but I don't think I got triggered in, so that was a good thing. However, let's deal with this Thursday's trading. Now, after price had ripped down, taking out this SSI liquidity, we can take that off right now. Price is still heavy because from the weekly time frame, like I showed you before, we are very bearish, right? So we can see this fair value gap. We can see on that fair value gap here. Price can react from either of them. It can decide to go far into premium, right? Now we have a new range from this high to this low. Price can decide to go far into premium to retrace back, or if it's very heavy, it's no bother to get to premium. So how do we know when to anticipate price not returning back to premium? We don't really know, right? We don't really know. We just have to wait for the Q zones and see how price reacts. So now this is a fair value gap, right? A 1 hour fair value gap. So I'm going to target 1 hour here so you can know it when we get to the lower time frame. 1 hour FVG. And when you're trading with the 1 hour, what do? You drop down to the 5 minutes. So now on Thursday, let's talk about Thursday. Okay, what do we see? What do we see? That's a very beautiful question to ask yourself every time you come onto the chart, right? It's a way to get yourself into the trader's mode. You don't just come into the chart and start to give a trade. You ask yourself a question: what do I see? And you can see that after this news, the FOMC price is retracing back. It didn't get to premium. It tapped into this 1 hour fair value gap, which I will take off now, right? Then on this day, this is the 1 hour, I can take that off. You can see that this is the Asia session. We have equal highs above here. Price in the London session, which is 2 o'clock to 5 o'clock, which is the London Q zone. It's not the London session. The London session expands until 4 o'clock Nigerian time. But the London Q zone is where I'm hunting for setups. The only time I'm hunting for setups on the lower time frame is during the London Q zone. Now we have buy side liquidity, got swept, and immediately we broke below. And then we didn't just break below, we broke structure to the downside. So we now have this as a break of structure. So market structure shift. The first target if we are to take anything, is this low, the FOMC lows, right? So you can see that after price broke structure to the downside, it retraced back into what? These two candles right here, or those three candles, they are one order block. So that's an order block entry on OB. Or if you trade the OTE like I do, right? You put out your OTE, that's your Fibonacci retracement, and you target it, and you can see that it gives you a slightly lower entry. So I usually go for the one that is lower. So I will want to take the OTE so that I don't miss the trade, right? I've missed a lot of good setups looking for a sniper entry, and I think it's better you actually take a good trade than you get a sniper entry. Who cares about a sniper entry? Now, and from the OTE down to this level, you can see that it's a 4.6 arrow trade, and perhaps if you want to make or part with the 6 arrow, I just wanted the perfect 4 arrow, you can see that you would have stopped here, and this was a very clean trade. It extended for how long? It hits TP at after 1 hour 10 minutes. So if you're risking whatsoever you're risking as your 1 arrow, you will have missed times 4 in 1 hour 30 minutes. Show me a better job out there than being a trader. I don't know any. But then in the London session, the New York session, this was the trade for the London session, you can see that price retraced a little bit, right? Retraced, formed equal highs around this region. Okay, let's take out this low so you can see properly. And naturally, or you would have wanted to take this trade after price swept this high, broke below here, left these three up close candles, which then becomes another block, right? You'd have loved to take this, but it was outside the Q zone. I would likely not have taken that. But if you had decided to, this was a beautiful trade, and you would have targeted, let's say, 2 arrow, 3 arrow, and price would have actually hit. Right, usually when there's no clear targets, we just stop that. You just stop at 2 arrow or 3 arrow, and price actually played out. Took a lot of time, but eventually you can see that price actually got the target right here, and it have been a beautiful trade, but it's outside my zone. You can see my blue box, so I likely wouldn't have taken this trade. Now you see some people who are focused on the lower time frame trying to buy from here after price swept at this low. You can see that the same setup I search for when I'm going in the direction of the higher time frame trend. You see that same setup for me down here. Price swept this low, closed above, broke above structure, closed above these highs, and you see that some traders will want to buy around this region. So they'll put their long positions just below here, stop losses below this low, right? This is the London session, New York session. It's a protected low, and then the target what? 2 arrow. So you can see that you just came very close to 2 arrow, but then price reversed on you, and it's very painful, right? Except you set break even, this would have been a very painful trade for you guys. Anyways, that's for you guys that try to catch the counter trend move. Of course, this was not Friday trading, and we had a TGIF. After a long range expansion, you expect price to retrace back into the range to form the wick of the weekly candle, right? So that is a TGIF setup. I'm going to show you on the weekly time frame. So after price have completed the whole range, you can see this wick from this low to this high that forms on Friday, and it's called the TGIF setup. Thank God it's Friday. Now this is a new week already forming, and this new week is going to be beautiful. I'm going to drop a new video about the price action occurring this week. Plot twist, you can see this blue line here. I've actually gotten a trade this week, and this is just Monday, and I'm going to break down that trade for you. The same thing, and it's going to be beautiful. Just leave a like, subscribe, and leave a comment. Share this video to your friends as well. And if you gain any value, please leave a comment, as it encourages me and it promotes the channel as well. So guys, at the end of every video, I think I'm going to be saying I'm going to get back the catchphrase. But for now, have a nice day, and have a good night.